Okay, so good afternoon and welcome to Ask Me Anything About Employment with Oscar Jiménez-Solomon. My name is Joan Rapp from Boston University and I will be your moderator today. This webinar is not a presentation, but an interactive question and answer period. For the next hour, Oscar will take your questions about engaging in the vocational process, job search, employer supports, finances, etc. He is a research scientist and research coordinator at the New York State Psychiatric Institute Center of Excellence for Cultural Competence at Columbia University Medical Center. And we're very fortunate to have Oscar today. Our event is part of the National Resources Center on Employment, jointly funded by the National Institute on Disability and Rehabilitation Research and the Center for Mental Health Services, two federal agencies. The content of this webinar does not reflect those agencies' views or policies, and you should not assume endorsement by those. During the registration, you were given the chance to submit a question in advance. Over the course of the webinar, we'll alternate between questions that you submitted in advance and the ones that you have today. And if you have questions today, right under Oscar's yellow and blue tie, you will see a blank box. Go down to the bottom of that box where it says everyone, just above there, there's a little white box. You can type your question in there and then hit the little balloon and it will show up for everyone to see. So that would be a good way of doing it. If you prefer to use the phone, then you're going to have a little extra step where you're going to let us know first in the chat box phone and then we'll explain what to do. You're going to press ** on your phone and that will unmute you. But don't do it now, okay? All right, your participation is critical to the success of this event because we don't want Oscar to be on a podium. We're expecting this to be a joint learning endeavor. As a reminder, if you have joined us by telephone, please be sure to mute your computer speakers before asking a question. It will cause an echo sound that is not pleasant. So welcome to this webinar, and I hope you enjoy the next hour. We'll get started with a question submitted during the registration, and this is a good one for Oscar to start with. Oscar, please talk about what you mean, and this was a quote right from the announcement of the webinar. Increasing income and keeping some of my benefits. I don't understand how it all works. So how's that for a question?
That's a great start. That's a great start. Well, first I just want to say thank you, John and David Blair at the Boston University Center for Psych Rehab and the National Resource Center on Employment for inviting me to be with you all this afternoon. I'm very excited to have this chat with you on this topic. It's very close to my heart for a number of reasons. Most important is because I not only work professionally in this area, but I'm also someone who experienced the hard impact of not being able to work, being out of work, and living in poverty and really struggling for a long time, primarily because of lacking the supports during the time that my recovery started. So this topic is not only important to me professionally, but also very important to me at a personal level, and that's why I'm so passionate about it. And the first perhaps disclaimer I might want to say is that I will do my best to answer some of the individual questions, and I will be sharing some resources that I hope are helpful to people or for providers who are online. But what is very important for me to say is that in the area of building assets, improving financially, improving income, accessing work incentives, or any other supports that might help any one of us or someone that you support to increase income or assets while receiving benefits, it's very, very important that you or the person that you support seek individualized benefits advice. And I will say more about that. That is really, really, if there's one thing that I really hope that all of you can actually walk away from here, are two messages. One of them is that it is possible to increase income, to have earned income, to accumulate a number of assets while transitioning to work and still be able to keep many of the benefits that have been helpful to many of us in as part of our supports or as transition supports. Some might actually choose to give it a shot, to try without them. And for some people who don't necessarily want to do that, there are many options in between of keeping some of the benefit, still be able to earn income. So what we mean when we say to be able to work and keep some benefits is that there are a number of programs from Social Security and from other agencies that help people and that can help people. And some of them, and there's one that is very, very new, that is an airplane that is just about to actually take off in the next few months to help people with disabilities or receiving Social Security benefit to earn income through work, to accumulate some savings or other assets, and keep some of the benefits that they have, both cash benefits and also health benefits. So that's the general answer. I mean, certainly we can talk a little bit about some of the examples. You tell me, Joan, if that would be helpful, perhaps to just give one example of one of the programs that we're referring to when we say be able to keep benefits, to be able to work, keep benefits, and still increase income and assets among all the programs and resources that are available.
Sure. Why don't you give us an example, and if you could give us a clue about what this new plane is that's going to take off.
Okay, wonderful. Okay, so just going to jump to one example. Let me start actually with some exciting news, because actually this is something that probably many of you have not had the chance to hear about yet, because it's still in the works, although it has already been approved at the federal level. Let me actually start with what I think is a very exciting news for people with disabilities across the country. In December, about 6 months ago, the U.S. Congress passed a new law, federal law, that is called ABLE, as in A-B-L-E, or Achieving Life, a Better Life Experience. And what that act, that federal law, has done is to create a major shift in one of the most crippling rules that Social Security has, that has affected many people on Social Security, especially Social Security, Supplemental Security Income, or SSI, which is the limitation that many people have to be able to accumulate any savings and still remain eligible for SSI and for Medicaid. So the long and short of it is that ABLE, or Achieving a Better Life Experience, is a federal law that allows each state in the country to create these programs called ABLE accounts, which is specifically a savings account for people with, this is what the law says, significant disabilities, and that still being defined more specifically by the Department of Taxation, by the federal government, for people whose disability appeared before the age of 26, which does limit the eligibility, and that will allow people to save money tax exempt at levels that we have never seen in the U.S. without affecting SSI and Medicaid eligibility. And what those levels are up to $14,000 per year, meaning that if either I, a family member, or someone in my life decided to help me save up to that amount, up to $14,000 would be tax exempt and placed in I will be able to place them in an ABLE savings account and not affect my eligibility for SSI. At this point, the asset limit for people on SSI is $2,000, as hopefully most of you know, and also Medicaid. This means that someone could be able to work or through also contributions of family members, be able to save without having to pay taxes and without having to affect their eligibility, up to that amount per year and up to $100,000 in a lifetime, which means that for the first time, really, it opens up, for example, the opportunity for people to save money in a retirement account. Because up until this point, SSI and Medicaid eligibility has been affected by retirement accounts, for example, by private retirement. And so that's the long and short of it. The hiccup is that these programs are not still available. States are working on it, and some of them are further ahead than others. And they should be available in many states towards the end of this year, so that people who are eligible can actually start benefiting. One of the reasons why I wanted to bring this up is because both through my personal experience and through work I've done, at times I've seen situations where people, maybe supported by misinformed providers, have been able to work and have been able to save a little money because they were complementing the money that they earned through work. And whenever they were reaching $2,000, they were encouraged or prompted basically spend it in things that were not necessarily needed for the person. And because many people didn't necessarily feel that they had an opportunity to put some money aside for things like education, housing, transportation, employment, or many other expenses. This program will allow you to do that, will allow people who are eligible to do that, and be able to build some savings for things that are needed for the person, and that are not affecting eligibility for SSI and Medicaid. So you tell me if that gives you a kind of a basic idea of what this new program is going to be allowing people.
Yeah, and I'd just like to add to that, and people can look this up as well. The IDA, which I think it's Independent Development Account, which allows people to save money and have the money they save towards a home or towards their education be matched by 2 other agencies. So that's a really great one. So if you put these 2 things together where people can show more savings and then get it matched, there's a triple benefit there. Okay.
Very, very much. And you know, I'll just thank you, Joan. And I just put on the computer on the screen a lot of information on those individual development accounts. Maybe I'll share this. This is actually a link to a database of individual development accounts that are available throughout the country. Unfortunately, it's not comprehensive because no one is able to centralize them. What I would encourage you is to find out through your community, and especially credit unions in your communities, if they have individual development accounts. Because many of these individual development accounts are unfortunately very hidden, and they're usually not very large programs, so not everybody can have access to them, but they can be helpful to people. I wanted to share the story of a friend actually, who shared with us how he and his wife, his name is Pilot, and his wife Joan, were able to save. They live in Syracuse, New York. Where, just to give you an example of how these individual development accounts work, they found a credit union in their town in Syracuse that matched, for each dollar that they saved, matched it with 4. So their goal was to save $1,875, and they did. They were able to do that in about a year and a half. And the credit union matched it with $7,500, which gave them over $9,000 that they were able to use as a down payment for their home, and they were able to close on their home a little bit over 3 years ago and be able to actually accomplish their dream of saving for a home. And that is one of the examples of the goals that IDA is allowed to do, is to save towards buying a home. The other two that are also available in many communities are to start a business so that someone can actually work and be self-employed, and the other one is to go back to school.
Beautiful story, Oscar.
Okay, so Richard, thank you for your question. What I see here is, I'm going to just read the question. If I use the saved money to gain assets, does that count against $100,000 lifetime savings? And what I understand, Richard, if I get this right, is would the $100,000 be lifetime maximum? And if, let's say, for example, or is it at any given point, meaning that if I spend $20,000, do I still have up to $100,000 in total? Richard, I do not know the answer to that, and I think that, and I may be wrong, but I think that is one of those pieces that the federal government and the Department of Taxation is trying to figure out, which is sort of the more specific ins and outs of how this is going to work, the eligibility criteria, and how it's going to also increase. One of the other things that we know is that right now it's $14,000 and $100,000, but those amounts are going to increase each year with the cost of living increases. But if I actually let me look through my notes here, and maybe if I actually can corroborate, can find information that maybe I'm not remember, and I will make sure to mention it in a few minutes, okay?
And Stacy asks about sharing the slide again. I just want to mention that this session is being recorded. It will be put on our website, and you can access it at any time if that's helpful to you.
Sure, and just in case it helps, Stacy, here's the website, cfed.org, cfed.org, and that should bring you. You can also Google it very simply, Individual Development Accounts, C as in Charlie, F as in Frank, E as in Edward, D as in David, and that will bring you to a database that is actually fairly large. It's actually listed by state, but like I said, it's not comprehensive. So if you do not see programs very close to you, do not get discouraged. What I would encourage you is to contact some other resources that I like to share with you, especially people who are more familiarized with benefits and benefits advisement in your community.
Okay, great. The next question I think you've kind of partially answered already, but I'll throw it out in case you can think of something else. This person says, as you're approaching retirement sooner rather than later, are there any options available to, quote, play catch-up while you were still working? So I think what the person is saying is, how can they save more for their retirement because they don't have much waiting for them?
Yeah, if I understand your question, there are two options that come to mind, and it would depend on as to whether or not you are working. Of course, if you are working or you're able to work or able to go back to work, one option would be to try to increase your contributions on a monthly basis or bi-weekly basis, depending on how you get paid. One of the advantages, evidently, of doing that is not only that you'd be able to obviously save more from your current income, if you can actually afford it, if between the earned income or any other supports that you might have, but also because any money that you contribute towards retirement is tax exempt. So for each $10 that you contribute towards retirement, it's $10 that you're not going to have to pay taxes on. So it's a bigger contribution than as if you were using the $10, taking the $10, paying taxes on them and putting them on a savings account. It's definitely, if you have an employment that allows you or that gives you an opportunity to save towards retirement, meaning a retirement account, an employer-sponsored retirement account, it's definitely worthwhile. Your dollars are going to go much further because they're going to be tax exempt. Another option, if you qualify for, which I think is the part that probably John referred to, that hopefully it can be helpful to people as well, is that if once these able accounts are available and you are eligible for, and if you're eligible for this able account, one of the ways that one can actually save towards retirement is actually through that savings account, through the able account, and because it would allow you to pay for essential expenses in the future. There would be, again, those monies would be tax exempt because they would be protected under this new federal act. Another advantage is that if there's anyone or any other means by which you can actually get contributions, like, for example, a family member or someone that would be able to help you put money aside, those monies can also be included on the ABLE account, which right now is something that cannot be done. For example, the IDAs, just to give you an idea, the individual development account is only for earned income. And that is one of the advantages of this new legislation, this new program, the ABLE, achieving a better life experience, because it will allow not only earned income, but also gifts or contributions from other people that may be willing. So those are the two options that I would summarize for you. Is one, to try to increase the contributions to catch up. One of the things that I would suggest with that we're currently doing a study on trying to better understand how many of us actually access counseling services for financial matters. And what we can tell you is that what we're finding is that a very, very small percentage of us and people in recovery and also providers actually use or rely or have ever used financial advisors. There are people out there and programs in many communities that are willing to provide financial advice to people for free, for people who have low income or moderate income, middle income, and including plan for retirement. And someone who knows about retirement accounts should be able to help you figure out, for example, if you're able to put aside $50 from each paycheck, how much you may expect to receive in addition to Social Security through a private retirement account. So I would encourage you to do all of that, to consider an ABLE account if you're eligible, to consider increased contributions that would be tax exempt through your employer, and third, to tap into free retirement and other financial counseling that may be available in your community. And there are many programs. One of the sad things, I think, is that many of our organizations, whether they are mental health programs or even peer programs, have not been really connected with the financial community, and we really need to make a better effort to do that. And if you're a provider, I would encourage you very much to get to know the financial providers in your area that are outside of the disability, that are just part of the community and that help people because they have low income or middle income, and their mission, just like many of our programs, our mission is to help people with a mental health condition or a mental health recovery. Many of those programs are there to help people to improve economically, and we really need to make a better effort at bridging those.
Thanks, Oscar. All right,
Yeah.
This is a question which we hear all the time. We've heard it in even some of the other Ask Me Anything webinars. And I'm going to say what the question is, and then I'm going to restate the question so that it gets a different answer, if that's legitimate. The question is, I'd like to learn as much as I can about how to retain SSI, SSDI benefits while working. So that's the most common question that we hear. Now I'm going to throw a question out and rephrase it in a different way. And the way I rephrase it is, how can I maximize my income? Because they really have two different answers. And I think maximizing income is more important than how to retain benefits while working. Okay, there you go. If you don't like what I did, you can go back to the original question.
Sure, no problem. I will start with the original one. Let me share, this is probably something that was already discussed in other webinars, but I'll just reiterate it in case the person who brought this up, wasn't part of that. And it's never a bad idea to say it a few more, which is, if I understand, the person referred to SSI and SSDI, correct?
Yes.
Okay, all right. So I am not a benefits advisor, and I am actually not an expert in Social Security benefits. And I say that for two reasons. One is because what I like is actually to at times simplify the message just enough to create some trouble, and at the same time to just communicate the gist of it, which I think many of us do need to hear. Again, I will say, if you're considering working and are currently receiving SSI and SSDI, I cannot stress enough how important it is that you personally seek benefits advisement. It's absolutely fundamental, because you may miss opportunities that you're eligible for because each situation is particular, or you also want to make sure that you avoid any problems in the future, okay? Now, having said that, I'll just mention the two most important, what I believe are the two most important programs. And again, this is coming more from having spoken to many, many people who are having exactly the same question that you have, which is, how do I even consider it? If you receive Social Security disability, a very important work incentive or Social Security program that you should know about is this thing called trial work period, which really is exactly what it sounds like. It's a period of time that Social Security gives you to try work without affecting your eligibility for SSDI. And SSDI, again, the D is very important there. It's disability, right? It's for those who are actually receiving Social Security disability insurance, and who may have actually worked in the past, or who may have actually, sort of say it in short, inherited benefits from their parents if they were disabled when they were very young. What this incentive allows people is, if I receive Social Security disability, I've been able to go back to work. It's already been over 10 years, and I'm very grateful that I've been able to work now for a number of years and be able to support myself and be able to make enough income to support myself. If I was to become disabled today or tomorrow, probably my Social Security my Social Security disability, SSDI, would be significant. Let's say that it was $2,000 a month, okay? If at some point in the future, and I was eligible for Social Security disability, I wanted to go back to work, and I'm receiving a check, an SSDI check for $2,000, it means that I would be able to work for up to 9 months using this trial work period and make $2,000, $3,000 a month, or I'm knocking on the table here, or more, and not affect my Social Security disability income, meaning my SSDI check, for at least 9 months. So that's basically how the trial work period works. If your SSDI check is $1,000, you can make $1,000 for 9 months, $2,000, $3,000 a month for 9 months and not affect your Social Security disability, which I think is important for what you're saying, Joan, is that it would allow, I mean, it is meant to help people transition. I've actually known many people who, during those 9 months, they've been able to save significant amount of money, and that has enabled them to then do important things, like, for example, get an apartment, get a car, be able to actually invest in the next step, go to school, complete their certificate program, go back to school for a year to finish their bachelor's or their associate's degree that they left unfinished. It given them a cushion to be able to then say, you know what, I'm going to jump off to the next level. So that's one of the programs that is really, really important. And there are many nuances, and I'm not going to spend much more time because, again, hopefully you will not make decisions based on what I'm saying right now, but you will go to a benefits advisor, right? The other program that is really important for people to know, for people who are in SSI, or supplemental security income, which is usually for people who don't have a lot of work experience, didn't get the chance to work a lot, or didn't make a lot of money, and now they're receiving SSI, which is usually much, much less, somewhere around $800 a month these days, right? There's this program, which is special payments for SSI recipients, and it's also called 1619A, that the long and short of it is that gives people on SSI who go back to work a reduced check. That's the short story. It gives basically someone on SSI sort of like a prorated check, which is more or less like this. For every $2 that someone earns, more or less $1 gets deducted from their check. So for example, if my check is, if I get a job and I'm getting SSI, and I get a job and I make $800 a month at that job, more or less their SSI check will be deducted about $400. But if you can do the math, you can tell that between the money that I'm making, which is $800 a month in earned income through my job, plus even the deducted check, which would be about $400, I'm still better off. I'm still actually maximizing the amount that I earn in total. And hopefully that, for a period of time, will allow me to maybe, again, get some more work experience, build up my resume, or go back to school part-time through some other vocational rehabilitation program, and maybe in a couple of years be able to take another job that will allow me to let go of Social Security income altogether, and will have given me a cushion for a period of time. So those are options, and there are many others. You probably will have or have already had webinars already focused on these work incentives, which are really very complicated. But I just want to make sure that people are definitely reminded of these two, because these are two very basic work incentives that allow people to maximize the income that they receive, leveraging basically kind of mixing up some benefits and also some earned income. So, Joan, you were actually reframing the question. Can you tell me a little bit about what angle you were thinking about, just to make sure maybe I can actually speak to that second angle a little bit more?
It gets back to your advice about being sure that you meet with an expert benefits specialist, because every story has so many different individual variables. So that for one person we can say, okay, stay within $1,090 a month, and you won't lose your SSDI, and that will be your income. But there might be a better way by looking at the whole picture and all the incentives. There may be a much better way. I mean, the example you gave of having a larger deduction made, even if it's $5, there may be so many other variables to consider
Absolutely, absolutely.
In terms of, transportation benefits and, what you can accomplish with a PASS plan and who you live with and the other members of the family and what their story is. And so you have to really think, it seems to me like the goal that most people have is to maximize their income more than their goal is really to keep something. Their goal is to maximize their income. And what happens is people work so hard to get these disability payments that they don't want to give them up. But if they have the whole picture with all the variables that apply to them, they might find that it's really worth their benefit to work and to work more hours than they thought. I mean, and we have another question here that's from someone who works part-time at a grocery store and they want him to work more hours, but he doesn't like their health plan. So that's another factor. It's like you have to put all the ingredients in the pot to make the cake. You can't leave out the flour and you can't leave out the shortening. You have to look at the whole picture. And I think because people ask this question so often, they get this answer, which is, okay, earn this amount of money, keep your benefits. But that's not the real issue, is people want to get out of poverty. And that's what we should be talking about, how to help people get out of poverty.
Absolutely, Joan. Absolutely. Maybe I'll just to make your point, Joan, I'll comment on a couple of resources that may be very specific, like you say, to each person, to an individual, and that I cannot agree more with what you're saying, Joan, that it's so important that someone gets specific advisement and to explore, to really not leave any stone unturned, because, for example, and I'm actually having a little trouble here sharing my screen again. Well, I will comment on it verbally while I try to figure this out. For example, one of the opportunities that some people may be eligible for is this work incentive called impairment-related work expenses, or IRWE, IRWE, which is basically an incentive that allows people who receive SSI or SSDI to get a bit of a break or expenses they need in order to be able to work. So, for example, if someone can, very much needs to have an expense that is essential, that is because of their disability, like, for example, a job coach or certain type of transportation, right, or certain type of accommodation, they could actually use this work incentive to be able to get a break and have some of their income not be counted, which would allow people to actually have at the end more at the end of the day. Another one that typically we don't even think about when we think of Social Security, but it has to do with housing, that many people could be eligible. It has to do actually not with Social Security, but, for example, with the housing and urban development, HUD, right? So there's a program, for example, I don't know if you've talked about it in your webinar series, Joan, the Earned Income Disregard for people who are in HUD.
No, we didn't.
No, which is actually, so it's HUD. If someone is receiving people on, if someone is receiving a support under a HUD program, and typically how HUD works is that, for example, if someone is receiving has a rental, right, their contribution is calculated based on the amount that they make, based on their income, right? So many people are afraid of working because they're afraid that if they increase their income, they will have to pay a lot more for the housing because they receive HUD support. And there's a program called the HUD Earned Income Disregard that allows people to, for the first year that they return to work, to basically exclude, not count at all, 100% of their income, and not have it counted towards the recalculated payment for the rent, for their apartment, for example, that they could be renting. And for the second year, 50% of their income. What that means basically is that someone who may be afraid of losing immediately their housing support could actually use that time also as a cushion to be able to save, to be able to either move to a different place or to be able to get stabilized or be able to have a period of a year or two of getting an entry-level job and then moving on to the next level and hopefully getting getting into another position that will allow them to increase their income. And so those are some opportunities that are there for people to be able to leverage some of the resources that they get.
All right, let's see what other questions we have.
There was one question actually about checking accounts and debit cards.
Yes. Yeah. I am paid by a debit card because when I applied for a checking account, I was denied. Will I ever be able to get a bank account again?
That's a really good question. And Joan, I wanted to touch on that because certainly we spent quite a bit of time talking about benefits and some of those incentives, but there's a very concrete reality is that bank accounts can make a big difference for people. And what I would encourage the person who asked the question, is to, as frightening as it can be, and as hard as it can be, and bring a peer, bring a friend, or whoever you need to bring if you're having a hard time doing that by yourself. But actually ask for probably what the reason was that you were denied for a checking account. What probably may have happened, and it's not the only reason, is that maybe in the past this person had a checking account and maybe there were some overdraft fees that were not paid. Maybe it was left open and a check hit the account and there was some negative balance. And then a bank probably reported the account as, let's say, in default because there was an amount owed to the bank. And it was placed on a national database, just check systems that put that person's name and social security number on that database, that many banks will automatically disqualify someone who is on that database to get a checking account because of what happened in the past. So what I would encourage that person is to face, and to find out exactly what it was, because it could be $2,000 that maybe are owed. It could be $100 that may be more feasible for you to pay, or some settlement that you may be able to get to with the original bank that put in basically your name on that database. And I have known of many people who have been able to find out that it was Bank of America 7 years ago that I owed $200, and they were able to negotiate it, pick up the phone, call the bank, say, I want to pay it, but I don't have all the money. What can you do for me? And they could actually either reduce the total debt, they could actually help you, allow you to pay it in installments, but basically get out of that situation so that then in the future you can open a checking account. Because certainly it does limit choices for everybody to not have access to a checking account. I don't know what debit card you actually receive your payments or your earnings, but unfortunately some debit cards, especially prepaid debit cards, have very high fees associated, and you're going to end up spending more at the end, perhaps. That happens to many people who have to go to cash checking places that are charged $20, $30 for each check cashed, which is money that really they're taking from your check and that you're not seeing. So it might take a few months or 2 years, depending on what it is, but it's definitely worthwhile. One of the things that we see through the research and is that having a checking and a savings account is a major predictor. It's a major factor in people being able to access in the future loans, credit cards, be able to actually have financial stability. So it's definitely worthwhile the effort. And if you have any feelings about the idea of picking up the phone or walking into a bank or finding out what it was that caused that problem, I totally understand it. And I would encourage you to get rely on some support from a provider, from a peer, someone who can help you walk through that. Because one of the things that we see a lot, that I just want to bring the human aspect of all of this, is what some work that I'm doing personally here at our Center for Cultural Competence is on this idea is this area of financial shame. Many of us really struggle with feelings of shame and guilt and hopelessness around our financial situation. So let's face it for what it is. It is not easy, because if it was easy, everybody would be doing it. There are programs out there, but we know that it's not just the information or the understanding that something is available, but there's an emotional part to it that is the reason why peer support around it or support from providers is so important, so that we can actually just take the action, get it resolved. I've had to do that many times as I have resolved financial issues in my own path. And I can tell you how much I feel like part of the weight is lifted every time that a little debt is repaid. And for many of us struggling with mental health challenges and in recovery, that is a shame and a weight on our shoulders that we really can't afford, and that we really that will hold us back. And another important reason to face it with support, and to honor those feelings, and just make small steps towards resolving an issue that may have happened years ago when we were struggling. And it's better now than never. So that's what I wanted to say about that.
That's really, really great point, Oscar. I'm afraid I skipped over the grocery store question a little bit too quickly, but and we only have a couple minutes left, but you might want to comment on this. I work part-time at a grocery store, and they want me to work more hours. I have seen their health plan, and it is much worse than what I get now. Well, I lose my current health plan if I work full-time. I think another way of saying is, do I have a choice whether I take the employer's health plan or my own health plan?
So without knowing what health plan this person actually has, I imagine that this person has some
probably has a Medicaid.
Some kind of a publicly funded health plan, right?
Yep. Mm-hmm. Yep.
Yeah. So if the way that it usually works is that if someone, there are a lot of facts that are hard to actually. We're gonna have to make a few assumptions here. So what I'm seeing here is that for this person, they feel like their employer would offer them a health plan if they actually worked full time, but they're feeling kind of in the conundrum. If they take the full time, they would probably have to let go of their Medicaid and go with this health plan that is not as good as what they have right now. That's what you understand too, John?
Yes.
Okay. All right. So this is what I would encourage this person to actually find out, not knowing what state this person is in, which is to find out is in your state there is a program called the Medicaid buy-in for people with disabilities, for working people with disabilities. Many states are, unfortunately, they're not all the states are not mandated to have this, but many states do have them. the federal government created this option many years ago. They have a program that allows people with disabilities who work to maintain Medicaid, keep Medicaid eligibility, even if they make or they earn a lot more than the typical asset limit and income limit. What I mean by that is, for example, in New York, which is just one example, in New York, someone can earn somewhere, and it's a little nuanced, it's a little complicated, but even up to $57,000 per year and be able to keep their Medicaid. Meaning, for example, if I understand this person correctly, if you were living in New York and the full-time job was a $35,000 a job, $35,000 per year job, you would very likely, if you qualified for SSI or SSD, especially SSI, and have a disability, you probably would be able to keep Medicaid and be able to take that full-time job. So again, not knowing where that person is now. So that's actually if the employer did not offer any health benefit. Things get more complicated, unfortunately, if the person actually has access to health benefits through their employer. And I'm not going to be able to answer that for everybody because my understanding it actually will vary depending on where the person is located. But there is a chance that you may be able to keep your Medicaid. What I would encourage you is to, again, seek financial or benefits advisement around your health benefits, because I would not assume automatically that you will lose your health benefits if you take the full-time job.
Great, thank you, Oscar. And so I think everyone's going to run right out and find out if their state has the Medicaid buy-in, as well as this person will be able to contact at least their Medicaid office, if not a benefits specialist, and find out what the story is with accepting this job full-time. So we want to thank you for a very, I think, encouraging and optimistic and hopeful view of financial issues as they relate to work. And we thank you so much for your time and for your slides. And if anyone's question wasn't answered, we're going to try to write back to you with a resource or a response. So thank you, everyone, and thank you, David, for shepherding us through from your sick bed.
Well, I just want to say thank you, Joan and David, for the invitation. I have one final slide on the screen.
Okay.
I would encourage everyone, virtually in every community, in every state, there are independent living centers that have benefits advisors and also work incentives planning assistants who have access to much of this information. I would encourage you to actually go to one of these websites and look for that in your community. And thanks so much again for the invitation. And I'm very glad that I had the chance to speak to you all. And good luck.
Thank you very much.